In this video clip, I'll be talking a little bit about ideas from business ethics and corporate social responsibility. One of the most common issues being discussed across business globally now is how businesses can behave ethically, how they can behave with some kind of social responsibility, both to the communities that they're located in, but also more globally, with the pressing problems of environmental destruction, of various kinds of complex political relationships between states, and so on. Now, ethics is not a simple subject. If it were a simple subject, we would have resolved these problems by now. In a sense, ethics is the most complicated and the most pressing problem that faces human beings. Socrates, an ancient Greek philosopher, described ethics like this. He said that you should let no day pass without discussing goodness and all the other subjects about which you hear me talking and examining both myself and others. This is really the very best thing that a man can do, and life without this sort of examination is not worth living. What Socrates is telling us there is that examining our behaviour is the most important thing that someone can do. But all too often businesses don't examine their behaviour in this kind of way. They tend to think that simply making profits is the end of business activity in itself. But an enormous amount of writing over the last 30 or 40 years has focused on the idea that businesses should be discussing ethical issues. There's been an explosion of business ethics over that time. We now have virtually all the large corporations issuing ethics statements of various different kinds. We have an increasing explosion of activity in the universities with lots of courses about ethics, and the foundation of various institutes, both national and global, which are concerned with ethics issues. This seems to indicate that lots of businesses are taking ethics seriously. But I want to look beneath the surface and try and think about what businesses are actually doing that would allow us to think about whether they are actually taking ethics seriously. Now, firstly, we have a kind of assumption built into lots of the ethics literature that businesses used to be well behaved. In other words, that the crisis of ethics is a relatively new thing. For example, I'm sure you all remember the accounting crisis associated with the American company Enron. Enron, as I'm sure you know, was a large company that was brought down largely through financial misreporting. Lots of the talk within that, around that company at the time focused on the notion that Enron was an example of a new kind of bad capitalism. That organisations in the old days, in the 1950s, were somehow well behaved, that they didn't have ethical problems and so on, and that Enron was an example of a new kind of organisation that was somehow behaving badly. Enron, as you know, was rapidly followed by a whole series of other crises and a wide variety of other companies. But if we look at the instances of ethical behaviour in organisations, we don't see a new crisis. What we see is that organisations, since the advent of capitalism, have been behaving badly in a variety of ways. The fact that people only recently have started to look at these things in terms of business ethics and social responsibility is not in itself an indication that companies are now behaving more badly than they used to. What it could be is an indication that companies feel they have to behave better now. And that could be an indication that their customers, their stakeholders, their suppliers and so on are requiring different kinds of behaviour from them. So they need to look as if they are behaving more ethically. Now, if a manager asks me, how do I behave ethically? It's a little like a person coming to you and asking you, what do I do to be good? And there is no clear answer to that question. Different standards of goodness and badness apply at different times and in different places. Sometimes it's okay to do something, sometimes it's not. It depends where you are and who you are and what you're doing. These are the kinds of questions that have concerned moral philosophers for centuries. Indeed, for someone like Socrates, he lived roughly 2,500 years ago, he had precisely the same quandaries and dilemmas that we have now. However, I think it's possible to boil down the writing on business ethics into two largely distinct strands. On the one hand, we have a version of business ethics which suggests that business ethics is a discipline, something like strategy or human resource management, which will allow businesses to be more successful, more competitive than they were previously. The key phrase here, in some sense, is that ethics is good business. In other words, if you, as a manager, or your organisation behaves ethically, has an ethical code, has various ways of dealing with its customers, suppliers, its employees, and so on, that will result in your business somehow being more long-lived, more sustainable than it would have done previously. Now, this version of business ethics is clearly not a difficult one for managers to adopt. It's a version of business ethics which is quite comforting, which says that you can be both good and profitable at the same time. And there are lots of examples of businesses who appear to believe this. In other words, that business ethics is something that can help them make more money. It's in this context that we get ideas about, say, you've probably heard the term greenwash. This is a term which describes the idea of giving something the appearance of an environmental concern without necessarily changing a great deal about the way that the organisation does its business. The greenwash, in a sense, is an example of marketing. And I would suggest that quite a lot of the business ethics is good business kind of literature is basically about marketing. It's about letting people know that you are a good business. Whether you are or not is not necessarily what's at issue. Now, the problem with this kind of approach should be fairly obvious, because if we compare this to individual behaviour, it's a little like someone giving you a present in the hope that they will get something back. In other words, it's a kind of bribery, a kind of deceit. And if we saw that kind of activity being carried on by our friends, our colleagues, and so on, we would be quite suspicious of it. We would regard those people as only being ethical because they wanted something. They weren't being good for its own sake. They were being good because this was a kind of goodness that would give them a sort of reward. So that formulation of business ethics, I think, is a very strategic one, a very calculating one. And I find it rather difficult to see that as ethics in itself. I rather see it as a form of strategy, a way of talking, which allows you to convince someone that what you've got they need. On the other hand, there's a much more dangerous, a much more compelling version of business ethics. And this is the idea of business ethics as a check on organisations, as a kind of way of thinking which prevents businesses from doing things that they would otherwise rather like to do. In order to understand this formulation of business ethics, we really need to go back to understanding something about the way that firms operate. After all, in the vast majority of writing on management, students and managers are continually told that really all that matters is the bottom line. It's the long-term survival and profitability of the organisation itself. Now, if that's the case, then it shouldn't surprise us that what managers do with ethics is to turn that into something that makes them profit. And indeed, it shouldn't be surprising either that business organisations will tend to look for profitability wherever they can see it. Whatever the advantages are, they will try and find them and use that as a way to gain some kind of value for their organisation. But what the second kind of ethics I'm suggesting does is to act, if you like, as a voice of conscience, as a way of preventing organisations from doing things that they might otherwise rather like to do. For example, we think about a fairly simple example, pollution. It is relatively cheap for organisations to dispose of various unpleasant and noxious substances by tipping them in rivers or whatever. Okay, that's the cheapest, most efficient way of doing these things. And it's cheap and efficient largely because it externalises the costs of dealing with the treatment of whatever these things are. Now, business ethics of the second variety would suggest that doing those things is wrong because of the long-term consequences. In other words, it would prevent managers from doing things because they would recognise that the still small voice of conscience within them would encourage them not to think about the bottom line, but to think about other areas. But in some ways, this is expressed through the notion of stakeholders, which is a very common way that people talk about business ethics nowadays. Because most businesses have a wide series of stakeholders, not just their shareholders. Now, if you read more about business ethics, you might begin to see that business ethics is a discipline that extends the domain of stakeholders. It allows businesses and their managers to think about the multiple responsibilities they have and not simply the responsibilities they have to their shareholders.